Tuesday, December 17th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the everything bubble, and I'm going to make a forecast for next year. And I usually don't do this, but things are getting so crazy. Stock markets keep going up. Economies don't seem to be doing well. We seem to think we are in the beginning of a crisis, a repo crisis, right? And yet everything keeps going up in the stock market. My theory, and from doing some thinking of late, is that this everything bubble is going to be the biggest bubble, of course. It's going to be the longest lasting bubble, and it's going to be the one that crashes the most, but we're not done yet. Yes, we need to change our minds sometimes. A lot of people have been waiting, and I have said in the past that we should collapse. And I usually say that I don't know the timing, but I'm going to put my neck out this time and say 2020 to 2021. I think it's even before 2021. And it's going to be, how can I say, something that will shock everyone. And I think it makes sense because central banks realized this year that they need to keep inflating because if they don't, everything implodes, right? So they're really going to put the foot to the pedal, especially the Federal Reserve. We've seen that already in the last few months, right? So I'm seeing the Dow going up to 40,000 in 2020. I'm seeing the oil price going up to $150, and I'm seeing gold going up to almost $2,500. It might sound crazy, but I think that's what we're gonna get. But after that, we're gonna get a total collapse of the stock market, of commodities. Even gold will correct then, but gold will probably correct to levels above where we're now, I'm gonna tell you why I think that. The fundamental reason you all know is the money printing by the central banks, the trillions that they're gonna have to inject to keep things going. I'll give you the technical reasons as well. So why have I come up with this idea? Well, I read an article yesterday from King World News, and they pointed out that the CRB index was starting to make a move higher, and I think we need the CRB index to move up, for precious metals to move up, for everything to move up, right? Because we can't just have gold moving up. We need all the commodities, non-monetary commodities, to follow, right? And the CRB hasn't been moving much lately in the last few years. So CRB basically is made up of 19 commodities. You have aluminum or aluminium, cocoa, coffee, copper, corn, cotton, crude oil, gold, heating oil, lean hogs, live cattle, natural gas, nickel, orange juice, silver, soybeans, sugar, unleaded gas, and wheat, right? Petroleum-based products make up 33% of the weightings, right? So it's important that the oil price and the energy sector or petroleum-based sectors do very well. It's important also that copper does well. So let's have a look at the chart of copper. When I spoke about this a few days ago, I think last week, that copper looked like it was breaking out. So you can see here in the weekly chart of copper, that's continuing. We're breaking out of this triangle. Still, there's quite a bit of work to do, so it's not confirmed yet, but that's what I said last week, right? So now let's have a look at crude oil, which needs to go up if we want to see the CRB do well, right? So here's oil starting to move up above 60. I would say that 67 is a very important level to break out of. But one thing I wanted to show you about this chart, if you go back to 2005, right? Oil went up, topped around 2006, middle of 2006. Then it dropped in the beginning of 07. And all throughout 07 and towards July 2008, crude oil went from $50 to almost $150. The high was 147, right? And we knew back then in 07, 08 that things were not well, right? Subprime crisis had started, and yet the oil price went up, right? Into that crisis. And then you got the crisis and oil collapsed. So what I'm seeing now, and that's the reason why I've extrapolated into this bubble scenario, is that I think we could see oil do the same thing, even though it looks like we're in the middle of a repo crisis. I could see oil doing the same thing it did in 07 and 08. So it would be 2019, 2020. That's what I see oil doing. Yes, it has started this year because, as you can see, oil was down around 45 in the beginning of the year, and we're now at 60. So that's how I came to that conclusion there. Let's have a look at gold, what gold would be doing. Of course, gold is still looking very good. The weekly chart here, consolidating, we're almost breaking out of that falling wedge, and I think it could get quite explosive. We could see a leg up to 1800, maybe even 1900. And I said 2,500 gold. Why is that? Well, I did an extrapolation, let's say a 50% increase in the price of gold. It would take us to 2,200, and I've rounded it up to 2,500. I think gold will outperform the Dow. So now let's look at the Dow chart, right? Here we have it. This is a monthly chart going back to 1999. And all I've done here is I've taken 27,000, which was a key resistance, and I timed it by 50% or 1.5 and got to a level of 40,000. And why did I do that? Well, if you look at the previous important top was around 18,000, and then we went up to 27,000. That was a 50% move. So it's very simple. I just extrapolated the previous move onto the next move, and that gave me 40,000. So yeah, it might sound crazy, but the markets have been crazy, and I've been trying to figure out what's going to happen in this scenario of Dow 40,000, oil 150, and gold 2,500. Makes sense to me. It's kind of a hyperinflationary move in all assets, because if you're going to have an everything bubble, you need to have commodities follow, right? So that was the last clue, I think, of the puzzle, or the last piece of the puzzle that we had to put together. And the reason I did that was looking at the CRB index. I'll show you some charts of the CRB index here. I'll show you a short-term chart first. It's a one-year chart. You can see here we closed at 185.21 yesterday, above some key technical levels here. If you look going back some previous highs, so it's looking pretty good. I did some Fibonacci analysis as well, retracement, looking at the longer-term chart here, a 5-year chart. And we've had a high in May 2018 in the CRB of 203.69, and the low was February 2016 at 159.63. And it's interesting that the low in 2016 was a couple of months after the low in gold in December 2015. So it looks like the moves in the CRB are lagging the moves in gold. So looking here at the 50% retracement of that low and high, I get 180, 166, which we're clearly now breaking out of 50% retracement. So I would say the next key level is the 61.8 at 186.86. So there you have it. Everything bubble will be, in my opinion, and this is not trading advice, what would I be doing in this scenario? Well, what I'm doing is I'm prepared already. I've got precious metals. I don't have a portfolio of common equities or stocks. I don't have exposure to crude oil. I guess I could look into buying calls in crude oil. I could look into buying futures in crude oil. I'm not advising you to do that. Or you could buy ETFs if you feel comfortable with ETFs. Same thing goes for the stock market, right? You can do all kinds of stuff and you need to do your homework. And this is just my opinion. I'm not telling you to do it. Dow 40,000, oil 150, and gold 2,500. I calculated at those levels, the Dow gold ratio would be 16. So I would think that gold will outperform. But the only problem with this scenario is that there's going to come a point where everything's going to flip and we're going to see the biggest crash, I think, ever. Because you've got the biggest bubble, the longest lasting bubble, the everything bubble, and then the biggest crash. Let's look at where the markets are this morning. I'm early this morning because I need to go out early today. It's 7:07 a.m. London. So right now we've got gold at 1477.60, up $1.50. Range has been fairly narrow, 1474 to 1478. The high yesterday was 1480. Silver 1706, up 3 cents. The Dow futures up 10. The S&P futures up 4. Nasdaq is up 16. Nasdaq has been doing well. Nasdaq 100 future. The pound has dropped quite sharply here this morning. We're at 132.53, down 0.6%. I expect to continue to see volatility in sterling or cable. Euro 111.44 unchanged. Dollar yen 109.56, and the dollar's back below 7 versus the Chinese yuan. It's at 699.70. WTI crude $60.16, up just 5 cents overnight. Brent is at 64.83. And to finish off, the bond market 10-year yield is down 3 basis points at 186. If you enjoyed this video, please hit the like button. Subscribe to the channel if you haven't yet. Please make sure you share it far and wide as well if you enjoyed this video. And make sure you hit that little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, DTube, Steemit, and BitChute. I wish you all a great day. Take care. Bye.